Hi, everybody. My name is Phil Blancato, CEO and President of Latimer Thalman Asset Management, Chief Market Strategist for Osaic. Welcome to another weekly Market Impact. Here we go again. What's today's date? 26th of May. Oh my gosh. Where did the months go? It's nuts. And we've talked about my daughter graduating, Luca, who is living the life of Riley, enjoying herself before she goes to work full time in New Jersey at a company called Lord Abbett. Very exciting. We've talked about all the kind of amazing things that are happening this time of year with getting ready for summer. If this winter, spring ever ends, and all, it's kind of amazing how far we've come so fast, right? It's already summer. I know many places in the country where the kids in high school are already out of school. In New Jersey, we have the traditional summers where you end by late June and start in early September. It's kind of Memorial Day to Labor Day is our calendar. In fact, a little later than Memorial Day, usually second or third week of June. And then we go back to school after Labor Day. Sort of the traditional summers of July and August, where I know a lot of states get out in May and they're back at school by August, which to me is nuts because it's so doggone hot. Why would you do it? To my friends down in Valdosta, Georgia, I'm a kind of a weather nut. I keep a close eye on weather because there's a lot of economic reasons. And there's been some hit and miss on droughts. Nothing terrible. And there's some dry spots. There's always some dry spots. But believe it or not, all this rain that's coming, I don't know where you live, but for us, for me, it was 3 days of rain. Basically Friday, Saturday, started Friday night, Saturday, Sunday, Monday, just torrential rain, 3 inches of rain in just a couple of days' time, but just cloudy and windswept rain. And not the best Memorial Day weekend, but you still make the best of it and you have fun with it. Hopefully, everyone took a minute to honor some of the veterans who lost their lives. The Wall Street Journal had a wonderful picture on the front of it of some of the older military folks. And this weekend it's a holiday weekend, but it's also a chance to celebrate folks who give a lot for this country. Hopefully, we all did that while they were getting soaked. I had to go from I was down on the Jersey Shore. Long story. My wife's best friend lives down there, and we went down to visit her. Then I took off from my Pennsylvania house. My father, God rest his soul, always wanted a Pennsylvania country house. So I got to go up there and drove the whole way in the rain. When I finally left there, I got there Sunday morning. And by the time I left on late Monday afternoon, it was blistering blue sunshine. So the irony was we had this really terrible weather pattern. And then by the end of the holiday weekend, sure enough, it turned to be beautiful out. And that's okay. No big deal. I did go home and trim my hedges last night, which I've been dying to do. I did some hedge trimming last night. My weekend was very casual, nothing too terribly exciting, except I did get some planting done on Friday for my gardeners out there. I'm doing some things a little different this year. I have one of the two gardens we manage. One is just 100% dedicated to the tomatoes for the tomato sauce, Roma Plum, San Marzano, and then a few other smaller varieties I won't go into. And they're all from seeds from the prior year. My San Marzano had this gigantic one that was full of flavor, kept the seeds. I can't get it going. They're gonna die on me. They're dying on me. I just can't get them started. I put them outside before it was warm enough. I made a mistake. Things happen. Next year I'll be better about that. But anyway, the other garden will have some cool stuff in there. I do a lot of stuff more like Italian stuff, but Italian parsley, more oregano than I know what to do with. Oregano stuff, very strong oregano too. If you need oregano, let me know. But escarole, do a lot of escarole, all kinds of fun vegetables that you don't normally do that are interesting because it just makes for very good early summer eating. So lots of lettuce, a lot of broccoli rabe, and all kinds of fun things. Hopefully you're doing some gardening too. Anyway, I'll keep it short this week. I've had some very long podcasts for you all. We try to keep these things, I like to keep them around 20, 25 minutes. So it's a quick hit for you all, and then move on with your week. So obviously, when it comes to markets, plenty to think about, except one of the headlines I saw, which was a little bit concerning, and it plays into the topical headlines where I'll begin today. We had a weird home sales number come out, headline, new building permits. And when I looked at new building permits for what's happening last month over month and then to a degree year over year, one of the things that jumps out at me is startling. That multifamily permits, the building of a multifamily housing is up 21%, 22% year over year. There's over almost 600,000 applications being filled or buildings being started for multifamily, while single family permits, new building permits, fell 2.6%. And why that's surprising to me is because we're just still not seeing movement of housing, the housing market. It's just still too tight. Very interesting piece I read over the weekend how kids are tapping mom and dad to borrow extra money to be able to buy their first home. And that's because the housing market is too tight. We're just not building enough homes, people being pushed into multifamily. It does not bode well for demographics. A piece I read over the weekend about demographics globally, that we're just not having babies anymore. And even places like India are beginning to turn down. And the phenomenon, and the article went on to say no one knows why. Is it why are there low fertility rates? Why are people having less babies? I'd argue they're missing the whole conclusion, which is things are just too expensive. They're too expensive to buy a home, or the desire to live life with less kids to have more. One thing that's fascinating about AI, and I'm sure you're all sick of that word. You're gonna laugh at my shout out is this week. I'll get to that later. But one thing about AI and what it does for productivity should enhance wages, but couple AI with the ability to search for anything at any time, and then the visualization of what the internet brings, and that the internet does bring the ability for people to see how the rest of the world lives. It's a little bit like young kids that just don't go on dates anymore, from what I can tell. It's bizarre. Everyone wants to be an Instagram model. Everyone wants to live that utopia that they see on their phone when I don't think that's real, right? We all know it's not. And yet I think that has a lot to do with population rates coupled with expenses. And I read a piece over the weekend I thought was very interesting about why everything is more expensive. And if you look at the cost of healthcare, up significantly, up about the comparison was 1975 to today. And if you look at things that have contributed, that workers now contribute more than $7,000 a year in addition to their healthcare. To get childcare went from around $6,500 to $15,000 a kid per year. That's a lot of money. When you went from one person working and the other one optional to now both people working. And if you really come down to the unaffordability of housing, that housing has gotten so incredibly expensive, we just don't build enough homes. Interesting, post the 2008 financial crisis, we saw private credit go from about a $2 trillion industry to a $16 trillion industry because regular banks weren't lending. We're actually seeing a bit of a reversal of that. It's actually a really exciting thing, and I'll touch on that just for a second. One of the things I picked up on is that maybe, just maybe, you're going to start to see commercial banks, the ones we all grew up with, start to lend more. In fact, this year, as we're seeing private banks, private credit banks lend less because of some concerns about defaults, we're seeing public banks step up, and there's even been some deregulation there. That's a wonderful thing because I think that's a very important aspect of can you get the United States back to where it's good for everybody? One reality is the majority of the country, the top 10% own the bulk of the stocks in the United States. The top 10% own the bulk of the assets. The bottom 50% only own 3%. And sure, wages have been much better. When you think about where we're at from a wage standpoint, there's definitely an improvement there. They've been above the rate of inflation for a while. There's basically no taxes if you make less than $100,000 a year, you don't pay a lot of tax, if at all. The wealthy pay all the tax. But you see this kind of scenario where why do things feel more expensive? It's because on one hand, Americans don't actually put a price tag on the efficiencies we've gained. So think about 1975. You had to pull out a map, and you had to highlight it with a marker, write down all the twists and turns you had to make, and hopefully get to your destination on time, whether there was traffic or not. Think about the efficiency Google Maps or whatever map source you use has brought to your life. Powerful. AI, the ability to search for anything at a moment's notice. You don't need books anymore in your house to research something. Goofy things like clean air, clean workforce, clean work environment. Our environment is 79% cleaner today than it was in 1979. 79%. I'm sorry, 1975. Wow. Think about that. So over the course of, the last 40 years, you're talking, what am I saying? More than 40 years. Yeah, no, 70, yeah, about that. Um, you're looking at a scenario where you're 79% cleaner in air, and we don't count that as well. I'll give you another one. Violent crime down significantly. We don't count that either. Safer cars, airbags. We don't count that either. All of them, we live longer today, as much as 3 to 5 years longer, depending on where you live. And none of those are counted in our value of quality of life. It's all about dollars and cents. And that's because things have gotten more expensive. The middle class today is a lot more. Well, if you look at the number of people who are in the lower stretch of the market, the lower aspect of our demographics, and you look at where the middle class was in 1975 versus who was poor, there's a lot less poor and there's a lot less middle class because they've all become more wealthy. So we know the facts suggest that things are better off. But when it comes to the middle class, there is the burden of healthcare, childcare, education that costs a lot more. And I think sometimes we take it for granted that all these things that are normally inexpensive, housing being the primary one. So you get this sentiment. We had Michigan sentiment come out recently, really at consumer sentiment at some of the lowest numbers ever. And I think it's because people still think things are just more expensive. And then coupled with this concern, and they are more expensive. I mean, there's no doubt about it. We've always had inflation. It's just this post coronavirus, 2020 pandemic, regardless of who's in administration. You got higher oil prices now because of the war, and every day is a bounce back and forth. You had the pandemic issue that went up and never came back down. And never let a crisis go to waste, whether it's the beef industry or the egg industry and everybody in between, prices went higher and never came back down. The burden falls on the consumer. But I'd argue that if people would ever took a step back and look at how much more stuff we have today. We didn't have cell phones in 1975. We didn't have laptops in 1970. We didn't have the internet. We didn't have email. We have all these things that make us significantly more productive and efficient and healthier. And by the way, you used to watch your evening news by sitting on 3 channels on your TV set in 1975. Hopefully catch, Tom Brokaw, I guess, giving the nightly update. And that was your news, other than reading the Wall Street Journal or something like that. So think about how much more we've gained. And yes, it's more expensive. So what's the trade-off here? Hard to say. Kind of my opening thoughts this week of, I think we're in better shape than we've ever been. I really do believe that. I think people can get a job today. They're available out there. We've talked a lot about the labor market. When we added more jobs last month than expected, there's still plenty of open jobs. There's the ability to get training. When you think about getting trained today via AI or digital training, you can get trained on it. So I think there's a lot of powerful benefits. The downside of today's environment, buying a home and having a family is very, very difficult. And I think that's part of the reason why this sentiment suggests that people aren't terribly happy. I looked at, a comment made last week by a kind of an idiot, in my opinion. Forgive me for being a bit blunt, but it was a CEO of a company that came out and said something really pretty goofy. That he came out and said that their AI workforce, AI is going to significantly impact their workforce. And why that was so relevant was the way he put it, the first rung of their human capital were going to be eliminated. Really terrible, terrible language. You don't want to say it that way. Is he right? Well, that's a different conversation. Is he right? Is he right about the fact that, yeah, there probably is some of that? Is there a scenario? I don't know I guess I can give his name. What do I care? I don't know him. He doesn't know me. The gentleman's name, where did I put his name? Is Bill Winters. It was escaping me. Bill Winters, CEO of Lower Value. I'm sorry, CEO of Standard Charter. Now they're a bank, and banks, like I said, are in pretty good shape right now. But they're going to eliminate 8,000 people by, as he called, quote unquote, lower value human capital. So when you think about why are people unhappy, it could very well be because they hear comments like this. Well, it's Morgan Stanley. It looks like they're gonna. Right now, they have found 11% of back office positions right now that have been eliminated due to AI, and 14% not being filled. So you have a scenario where you start to the CEO of JP Morgan, Jamie Dimon, said we have plenty of spots that are going to be replaced by AI. What does that mean? Well, folks are going to be upset about it. I'll show you the today's Wall Street Journal. I'm sure you can see this. So this is kind of funny. And you're still going to laugh about my shout out of the week. Look at the title of this thing. Artificial intelligence. Too much work to do? Have your digital twin handle it. And who wouldn't want to be more efficient? Who doesn't want more time on their hands? So we're in this weird paradigm right now where consumer confidence and sentiment is terrible. People are not excited. I'm sure they're paying more for gasoline. It cost me $80 to fill up my truck. I drive a Navigator, Lincoln Navigator. I fit in it, so I really like it. Forgive me for buying a big gas guzzler. For those of you who might get mad at me for that, but I fit in it and I care more about that than anything else. I'm 6'4", so that extra room means a lot. But when you see the consumer confidence numbers come out and the board, and usually you look at things like the Consumer Confidence Board and University of Michigan each have their own. Currently, expectations are 92, down 80 basis points from month over month. That would be below where we were during the pandemic years of 100. So people are less enthusiastic about the current economy today than they were during the pandemic years. Wrap your head around that. That's crazy. It doesn't make any sense. So there's some things happening out there that are a little bit funky. And I think a consumer's concerning. By the way, when you buy stocks, when a consumer's worried, it's usually because it's a low point. But certainly there's no doubt that things are more expensive, is what I was trying to get to. And at a time when you're seeing commercial banks begin to lend again, by the way, that's usually a great sign for economic growth planned ahead. It also means that we're probably expecting lower interest rates. And I still think the bond market is a great place to be. Bonds on the year, believe it or not, are flat. Well, they're down half of 1%. And that's because interest rates have gone back higher. So my point is, while things have gotten more expensive, I think some of this is our psyche of forgetting what is relevant today versus what we used to be. And there's no doubt houses are more expensive, groceries are more expensive, fuel is right now. And will this stuff ever go back? No. How long will the U.S. consumer need to get used to higher prices? That's the million-dollar question. And I don't know that we have a good answer for that. By the way, it's the global consumer. It's why I think there's less children. So I'm excited about commercial banks lending in. Yeah. Am I excited about the bond market offering yields that are really very attractive? You can go out and buy a 10-year U.S. Treasury earning 4.5 to 4.6%, a 30-year U.S. Treasury earning over 5%. These are incredible yields. And my expectation is yields still eventually go down. And why do they go down? It's fairly simple. Because we're in a deflationary world, because of demographics, as people get older, they spend less, and because of technology, AI being an example. JP Morgan makes more money if they lay off 10% of their workforce because they replace it with a digital twin. Well, if that's the case, then wow, we might have a scenario where Elon Musk might be right. Maybe 10 years from now, I don't know. We all have a robot in our house, and the government sends us a check every month to live because robots do all the work. Oh my gosh. That would be hard to swallow. But I mean, there's a lot of talk about that. Universal income for people who get laid off because of AI. Wow. That does not sound like capitalism to me. I don't know what that sounds like. Certainly not socialism, but it doesn't sound great to me. I think that's a little bit odd. I'm pontificating. I'm burning up your time today. My point is, let's look at the markets. For all the talk about how expensive things are, how the weakness of the consumer is, how we can't find homes, guess what? The stock market is at an all-time high. The S&P 500 is up 14.6% for the quarter. That means from April to now. On the year, 9.69%. And after today, we're up another half a percent, 10% on the year. The Dow up 6%, which, by the way, at one point, the Dow was the winner by a lot. Small cap stocks up 16% of the year, 15% for the quarter. Still the winner, by the way. Small caps, a place we really like, doing really well. Growth stocks, which had just gotten pummeled, they were down 14% at one point, are now up a whopping 17%. This has been a tech rally. A company called Micron Technologies is now a new $1 trillion company. Not recommending you buy it, but they do something interesting in the AI chain for memory. And guess what? They broke $1 trillion today. It's been very much a tech-fueled rally. Even places like emerging markets, which were once just absolutely knocking the cover off the ball, are still knocking the cover off the ball. Up 21% for the quarter, 21% for the year. International EFA is actually falling behind a bit. International stocks are only up just about 8.5%, losing to the S&P. I think that gets fixed, or that'll change when we see the war come to an end. Notice I haven't talked about the war yet. I'll get to that. So markets in general are doing really well on the equity side. The bond market, not so much. What does this mean? Take some profits from your equities and go buy some bonds. Why? What if the skirmish over the weekend in a war breaks out to a new, bigger war? What if we have a scenario where the ceasefire ends? The United States supposedly attacked some Iranian military sites because they were under threat, well, supposedly. Now, on one hand, you hear the president saying, yes, this is great news. We have this really exciting deal on the table. We're almost done, and oil's reflecting it to some degree. But on the other hand, we hear about an attack over the weekend. What if it changes? Where's the bond market going to be? Probably a safe haven. People should go buy bonds at a time when the war might get worse. Now, oddly enough, why yields are going higher is a different scenario. The reason why yields are going higher is because there's just too much debt in the world. You add on a little inflation on top because in the form of oil because of what's happening, and suddenly the combination of higher oil prices, too much debt in the world has set interest rates higher. why bonds are down on the year. But once the war ends, and you assume it's got to end soon here because the midterm elections are not far away, and consumers are getting pretty angry, hence back to sentiment about paying more for gas. Assuming there's an end to this thing, oil prices drop, yields drop right along with it, and we have a scenario where, the consumer is probably a little less grumpy, but stocks today really high. And in that scenario where yields go down, I think the stock market still does well, but the bond market will do just as well. So you can add some safety to your portfolio without taking on a ton of risk. We like that, right? Ways to diversify your portfolio and not take on a ton of risk. All right, a few more things, and I'll wrap us up and let you get out of here early this week. I don't want to keep you too long this week. I mentioned home sales. This week we'll get some interesting data. Just some updated inflationary data. We'll see what PCE brings. PCE, as you know, over the years, I've talked a lot about how PCE matters a lot. PCE, the core personal consumption expenditure, it's the stuff you buy month over month. How much has it gone up? Headline's going to be up because of oil, but core, if it's flat, will be another great sign for markets. And that's what we need. Continued good data to suggest things are not nearly as scary as they've been made out to be. So just a quick wrap up this week. A couple of things I would just hit on. AI, and I'll leave. By the way, the war. I don't know there's a solid update here. I don't think there is, but other than suppose, I guess we're in the scenario of, maybe we're getting to a resolution, maybe not. It seems hard to believe, but it feels like it. Okay. More importantly, when I look at my last topic of the week is AI and why AI is relevant. Well, certainly all using it today. There was a piece in the weekend about a guy who had to destroy the AI bot system that he had because he had fallen in love with the AI chat box and it was dominating his life. So people are finding ways to rebel against it. And there is a rebellion happening, whether it's data center build out or it's the cost of energy going higher that makes folks grumpy, job losses, that lots of folks are looking at this and simply suggesting, hey, wait a minute, I don't know that I want to pay this much for, this idea of AI. Yet it does bring tremendous productivity. I would bet many of you have used it to ask a question. I find myself using it all the time. I was working on a quad over the weekend. I had a problem with it. I asked AI, and it gave me an answer that was okay, not perfect. It's a good tool. It's not always the right answer, by the way. Heck, it's wrong probably 30% of the time. But it can get you on the path to a better answer if you use it as a tool, not a solution. Key point. But this rebellion is just getting going. Does the United States need to be double the rest of the world when it comes to AI data centers? Do we need to be spending the $1 trillion a year on its build out? There is, the United States is all in on this, and as are other countries, but not nearly as much as the United States, other than China. Do we really need to win an AI arms race against China? It's hard to say, but think about wars. What happens when you have AI robots running around shooting each other on the battlefield rather than humans? Or, God forbid, they turn those guns on us. So I think this rebellion thing is real. And when I see this, again, my digital twin article, I know you guys get it backwards, but it says too much work to do. Have your digital twin handle it. It does mean that AI is becoming such a dominant part of our everyday lives. And believe it or not, that's who my shout out is this week. My shout out is is AI, and I'll use it in general terms. Whether it's launching rockets to the moon, whether it's fighting wars, whether it's asking it health questions, it is fundamentally changing the way we live and breathe. The downside, I'm not worried about data centers and data center power. What's happening is there's this new insatiable demand for power. I think data centers will lead the way for us to getting much cheaper energy, whether it's nuclear modular nuclear reactors. By the way, next week, Kevin Hickerson will join me to talk about modular nuclear reactors. I've been promising that one, so it's coming. So more importantly, we'll have a good guest next week. My point is we might get stable or lower energy with all this development of trying to come up with power for data centers. The water thing is kind of a goofy thing. It's really not that much. I've heard different stories about this. If we all take a shower that's 3 to 5 minutes longer than what we normally take, that's as much of an impact on the water supply as the data centers. I mean, some of the stuff is goofy. But sure, probably got to find better ways to keep them cool. Maybe do them in space. This gigantic SpaceX launch is coming. Or I just think that the benefits we're going to get from it are going to be very powerful. And whether it's the healthcare industry, our own personal productivity, the productivity of the country, the ability for people to have better, higher paying jobs, we'll have disruption in the job market. Yeah, sure. But there's also a whole industry that needs to be created around it. The management of the data center, the management of the data itself, the building of getting the commodities out of the ground to build new power lines and so on. But more importantly, it's the surveillance and the compliance around AI and how it's applied. Some of these things you can go in and ask, how do I create a chemical weapon? And it'll tell you. Well, that's not good. We need management and oversight of some of this stuff. So I do think that it will become a very powerful product. Will there be bumps in the road? For sure. But the reason why I put AI out there as my shout of the week, when's the last time we had something this powerful happening in our lives? And shame on us if we don't use it to our advantage, and more so if we don't use it to not hurt the globe, to not hurt the United States, not devastate jobs, or, God forbid, have robots running down the street trying to kill us someday. I mean, jokingly, of course. But this stuff could get out of control. And we all know that, it doesn't. The Pope over the weekend famously came out and said, this thing can't build relationships. It doesn't have a heart. It doesn't have a soul. It doesn't know emotion. Why are we treating it like it does? I think the Pope's right. I think the Pope is suggesting it's a tool, not a solution. And the Pope's very concerned about the biblical side of this. That it becomes almost like eliminating the need for religion because of what the soul and what love means. At the end of the day, it's about love, right? Can a computer love us? Of course not. It doesn't have emotion. I don't think it could ever be programmed for emotion. If it does, it's not real. So we're in this wild time. And I wrap up this week by saying, look, markets are at an all-time high. The earnings season was really good. Well, it looks like there's an end to this war coming. It's all good for markets, especially the bond market. Put it all together, and you've got this kind of cool scenario where markets are running hot, probably hotter than they should. That's why I want you to rebalance. I don't think we end up with a 30% year on the S&P. I'd be very surprised at that, but we're halfway there now. Be diversified. But watching where AI goes from here, and the positives are our own personal productivity, and the negatives on the headline are going to be fascinating. And guess what? We're going to do that together. So weird shout out this week. Forgive me, it's not a cop out, but I'm going to tell you that it is all we talk about all day, every day. And I'm kind of sick of the word AI. I don't want to even hear it anymore. If I feel that way, I can't imagine what you all think. Have a wonderful week. I'll have a very special guest next week. And the week after that, I'll have Luca on. Her and I will be on a trip together. And I'll tell you, I'll keep it as a secret for now. We're going to go on a fun trip together, and we'll do a podcast with my wonderful young daughter, Luca, who's now a graduate and soon on her way to the workforce. I can't wait till she starts paying some of her own stuff. Her own credit card bill, and we'll get into that later. All right, well, take care. Have a wonderful day. Thank you.